Hey guys, it's Imran Larka from Options Insight again. I hope you are doing well. Hope this virus hasn't impacted you or your families. Obviously, it's a tough time right now for everyone. Obviously, UK's been in lockdown since yesterday, so fingers crossed this situation isn't going to last too long. In terms of trading, obviously, markets are presenting a lot of opportunity, so hopefully people are managing to not blow themselves up and sort of, just concentrate and be disciplined and do okay out there. So I thought I'd give a quick update on where I'm at, how I'm trading through this, and hopefully give you guys some help, some guidance. So first things first, S&P chart. As we speak, S&P is having a bit of a rip after bottoming out yesterday around the sort of, well, it was actually limit down yesterday, so it kind of stopped at 2180, but had it have been open on Sunday night, arguably it could have touched levels closer to 2100. As it happened, the Fed announced unlimited QE yesterday. That was this little pop there, that green bar on the S&P that went from 2220 up to 24 briefly. That got faded for the rest of yesterday as the market did its usual, fading all of these central bank actions, and now we're up again. Why do I think we're up? Bit of kind of fatigue, I'd say, from the shorts, but also I think this bill that's about to come through Congress, that the Democrats so far have been blocking, it's because they're trying to beef it up. Last rumor was around $2.5 trillion that is the kind of economic relief package that they're pitching. And the reason they keep blocking it is because they were saying it wasn't doing enough for the people and it was just helping the corporations out. And so if they actually do come up with something that can help the people and get money into people's pockets quickly, that can stop small businesses from going under and laying off their workers, that is pretty positive, right? So the governments are trying to pull out all the stops from what it seems, in terms of relief and aid. And that's what this market is rallying on, the optimism that they're going to be able to pull something out of the bag that actually helps people and it helps the real economy rather than just Wall Street. And that's what I think this squeeze is all about. I, up until now, have been advocating sell the rips rather than buy the dips. I would say this rip has potentially still got some legs. Like I say, once they actually get the bill through, we might get a final uptick to around my levels here, where I think we're going to meet some resistance around sort of the low 2500s area. I think if we can get there, then I would look to maybe re-engage with some bearish positions. So maybe some May puts I would be looking at buying on the S&P or various other indices globally. I think once this news is out, it's going to be hard to see where the good news, the incremental good news comes. And then it's going to be a case of the market realization that in a week or so, if not sooner, the US case count is going to be greater than Italy, and also what the numbers that were coming out of China that topped out around 80,000. I think if the US is in the hundreds of thousands, that's going to spook the market a bit. Also, how the healthcare system is able to cope with it is a big question mark. When the numbers get into the multiple hundreds of thousands over the course of the following few weeks, how are they going to cope? What kind of impact is that going to have on people and sentiment in general? It's going to be pretty poor. And also these stimulus packages that they're announcing all over the world, they're all great in theory, and the promise of them is definitely helping to support markets, and it's definitely needed. But how quickly, literally how quickly is the money going to get into people's hands and actually be able to prevent their businesses from folding? That is going to be the question. I personally am not convinced it's going to be fast enough, and I do feel like we may get one final push in this market to the downside that could take us arguably down towards the 2000 area on the S&P. So one final push up maybe towards here, 25, low 2500s, then I think we're probably going to see a move towards 2000 probably by middle to end of April. That's why I'd be buying the May downside puts to get a benefit from that move down to 2000. Okay, that's my view on the S&P and general equity market. The other thing I'm kind of looking at with a lot of interest is gold. So gold hasn't been behaving itself. Obviously, you had big old sell-off from 1700 down to 1450, which was actually a major support level. If you see here, 1450 was a support level. We got down there and we've bounced aggressively off that now. I mean, the amount of stimulus that's coming through on the monetary side and the fiscal side, pretty much it's all being funded by printing money, right? So the fundamentals for gold are incredible. The value of money, fiat money, is being debased in ridiculous proportions that we have never seen before. And gold, it was only a matter of time. I kind of mentioned this in my last video. It was only a matter of time before gold catches a serious bid. And in the last 2 days, you can see it's gone from 1450 to 1620 in like 2 days, 3 days. I mean, that's aggressive. Personally, I wouldn't be surprised to see 1800 within the next couple of weeks. And by the end of the year, I could easily see us through 2000, right? So I think gold is a fantastic sort of medium-term opportunity here. The fundamentals for gold are only getting better. Yes, it experienced a bout of selling due to margin calls and people needing to raise cash. I kind of feel like that's over. For me, the price action is saying that is over. We'll only know for sure once we get our final sell-off in equities and see if gold goes with it. But I'm starting to sniff that gold is breaking out to the upside, and I wouldn't be surprised if this is the moment for gold. So keep an eye on that one. The way I'm playing that is pretty much call options on gold. So I'm long some 2-month calls in the 1700 area and the 1900 area. And that's how I'm playing gold, basically. So what else? Finally, quickly talk about the dollar. That's another interesting one. Obviously, you would have seen the kind of FX moves that we got last week with what happened to the pound when it broke 120. Absolute destruction of the pound. Yeah, some of that's kind of blamed for the UK being a bit slow and not aggressive enough with containment measures. Also, the euro, after spiking to 115, it had that amazing turnaround. So there's been a rush for dollars. Okay, that the way to kind of rationalize that is that there is a massive dollar shortage. As everyone is rushing for cash, it's dollar cash that people need, right? So you have loads of companies all over the world in emerging market countries, and they have built up debt. Emerging market countries have built up debt in dollars, right? But their revenue streams have now all of a sudden come to a crashing halt because of what's going on with coronavirus and the global economy. But their debt doesn't disappear, right? So they still need to fund dollar-denominated debt, but their revenue streams have disappeared. They are not earning any dollars. They can't finance that debt. So there's a rush for dollars, right? And there's a squeeze on dollars. So if we look at the DXY chart, long-term chart on DXY, the dollar index tried to sell off, bounced hard, now it's broken this level. That was a big old level around 100. It's taken it out, touched 103s, having a little pullback here because obviously this massive stimulus is about to pass in the US. In theory, should be a dollar negative, but I would not be surprised once that news is out and they get whatever trillion bill they need to get out to support the economy, the rush for dollars will most likely continue. So I would be looking for targets on DXY to be much, much higher. So let's have a look at the weekly chart. Zoom out a bit. See here, first target really should be here, which we almost hit already. But if this resistance on dollar goes, on DXY goes, no reason why we're not heading into the 110, even 120 region as the next few months play out, as this rush for dollars is unlikely to stop, in my opinion. Okay, so those are the three main things that I'm looking at. Equities is S&P is always the best barometer to have a look at there. Equities probably still in sell the rip mode, but waiting for a bit more of a rip, waiting for maybe another 3 to 5% above here, where I'll feel comfortable really selling the rip in size. Gold, you need to own it if you haven't already owned it. What have you been doing? Make sure you get hold of some gold, either via call options or straight delta. And finally, look for ways to be long the dollar, because arguably that is the only safe haven around right now. And people are looking for safe havens, right? So it's not a lot else that has been safe recently. So that's my quick and dirty summary of the market. I hope that helped. Be careful out there. Be careful out there with regards to trading, and also be careful with regards to the virus. Good luck. Take care. Thanks.